Good evening, everyone. My name is Yogesh. Thank you so much for your patience. You have waited, and I see a lot of people today have joined as well. And fortunately, everybody who joined today was there yesterday as well, and on the first day as well. So it's glad to see that the audience is building up. The drill is similar. We know what to do. We know how to do it. Though for those people who have joined today, uh, we will give you a small brief of what we have done so far, and then if you want to catch up, I can do one-on-one sessions with you whenever you are free, and bring you at the pace of how we are doing it. In last 2 days, we have talked about what kind of asset classes are available in the form of commodities, currencies, cryptos, indices. And yesterday, we talked about how these asset classes moved. We talked about how to create a favorite watch list for yourself and what is the purpose of that watch list. And we talked about what kind of news is really important for you to keep a check on. We talked about the role of central bank. We talked about FOMC meetings, manufacturing data, GDP data, and how to interpret the earnings report, employment report, etc. Again, we'll do a lot of such exercises and practice over it. But then today, we are going to discuss about the whole mechanism. So now you know how to open the demo account. You have a dummy account with you. I'm sure everybody got a demo account. You talk to your relationship managers. Today, we are going to work on that demo account and try to do buy and sell. And before I begin, please, as usual, I hope everybody can hear my voice loud and clear. You can see my presentation, can see my screen. Please feel free to tell me exactly if you are not able to see my screen, if you're not able to hear my voice. There could be network congestion, so let me work on that. Meanwhile, if you can hear me, give me a yes or a okay. Use your chat option and send a yes or a okay, so I can proceed further and I can be fully at peace that you can hear me. Okay, right. Okay, great, perfect. Okay, okay. So a lot of people can hear me out. Okay, there's a question. What's the webinar all about? So you're joining day 3. The webinar is about being aware of financial markets. In the course of this session, we have started with why we invest, what are the avenues of investment, which are the areas where you can invest in commodities like gold, silver, oil, rice, wheat, coffee, sugar, in cryptocurrencies, in forex, like euro, pound, Australian dollar, etc., in stocks like Amazon, Facebook, Apple, Netflix, Google, Tesla, in stock indices like US 30, S&P 500. And then we have also talked about how the prices of these financial instruments move and on what news, right? Today, we are going to talk about how do we buy and sell in the live market on an online platform, and what are the risks involved with it, and how it is different from a regular buying and selling when you are out in the physical market, right? You will be allotted a demo account, and this is for those people who have joined today for day 3. I see a lot of people who are new here, along with a lot of people who have been with me from day 1 and day 2. So don't worry if you think that you have missed. We can always have one-on-one sessions. You can watch back the recording by the end of this week, and we'll definitely catch up and give you this same knowledge. Now, for those people, please, for everyone, we are going to do some dummy trades today, and please do not replicate these trades in your live account, because today's session is to make you more aware about how the buying and selling happens. It is not about research and analysis of why you are buying and selling at the moment. Okay, we are just going to do buy and sell and make you aware of what are the risks involved. So please do not replicate these trades on your live accounts. And if you want to do any trades, talk to your consultants, risk experts, and they will guide you towards it. So what I'm doing right now is for demo purposes, so please be very clear of it. Now, something what we call as margin trading. So today we are going to talk a lot about leverage, margin trading. We are going to talk about what kind of risks are involved. There's a question. I'm not able to see my yesterday's watch list. You will be able to see it. Let me tell you how you can do that. I am going to share my platform with you. Those who have joined today, please, and along with everyone, should have your notepad with you so you can note it down. You can click pictures of my screen, and as soon as you get your demo account, you can replicate the same watch list in it. Now, if you have opened your trading account or your dummy account, and if you don't see anything, all you have to do is, this is your products library right here, and next to it there is something called watch list. Okay, and if you have created your watch list yesterday, it should be here. Like I created my watch list yesterday, Investor Education Week Day 2. You click on this and your watch list will open. So you have to find your watch list. If you have closed your window, you click here, click on your watch list, and you'll be able to see the products over here. All right. And great, please keep asking whatever questions you have and I'll try to answer those. Tell me, I talked about gold prices yesterday, and I said whatever I'm going to say, you're going to remember it. What was the gold price yesterday when we were talking? Anyone? Go for it, guys. We are going to do a small exercise. What was the gold price yesterday when we were talking? Give me a approx number. I know, I mean, it's difficult to remember it for exact decimals. Okay, great, answers started coming. Do I need to save after creating watch list? No, you don't have to save. It should appear on next to your products library right here. Look at my platform. It should appear over here. If you have created it already, there will be a watch list number. And if you have added products, it should appear on your watch list. Just click here and you'll be able to see what you have created. Just click on it. Okay, 1787, 1787, 1784, 1785 dollar per ounce. Great, perfect. Now you see what I'm doing here. Now, today, tell me right now, what is the current market price of gold? My watch list is open in front of you. You have your watch list open as well. If you have not saved your watch list or somehow you can't see your watch list, you can still search the product by clicking on this search option right here. Look at this purple search option. Once again, look at this purple search option. You can write gold and you'll be able to see gold, cash, commodity. You click on it and you'll be able to see prices of gold here. Tell me, what is the current market price of gold? Okay, perfect. Perfect answer started coming in. Down by 0.2%. I'm really happy that you can see this. This is available right here, 1783. So now what we know, yesterday when you saw gold, it was 1787, right? 1785, 1786. Today it is 1783. As we talk, it's going 1782. Now tell me, if I want to know, what is the highest price gold has reached today? As we talk, what is the highest price gold has reached today? Go for it, guys. What is the highest price gold has reached today? Okay, great. Answers started coming in. Perfect. Perfect. I'm glad everybody can use this watch list now. So one good part is on the same column, you can see that what is the highest for now. So now you know the difference. Yesterday, price was 1785.86, right? Today, highest, if you see, it is 1795. So you know that there is a difference right now. It is going on 1782 as we speak, real time, and the highest is 1795. Yesterday I told you gold easily, it is capable of moving around $20, right? So as you can see, it has moved around $10 to $15 already, and US has opened 1.5 hours ago. So there is a lot of market movement which is expected to happen. So this is the daily movement of gold, which you can see. I have joined today how to create a watch list. It's very easy. I'm quickly going to show you here. Just have to go to next to your products, click here, create new watch list, and it will appear. And click on the add product, and then you can add whichever product you want. We can have a one-on-one session. I'll explain you further, because today we're going to talk a lot about margin trading and how to place a trade. Moving on, tell me guys today, since we are doing this practice, who remembers the price of Bitcoin yesterday? What was an expected yesterday when we were talking about who remembers the price of Bitcoin yesterday? And again, write an approx number, no problem. Write an approx number, whatever price you remember yesterday. What was the highest price yesterday, or whatever was the price you remember for the Bitcoin? If it was in your watch list and if you've went through, okay, I started getting answers now. Perfect. Okay, great. 45, 46, 48, 40,000. It was not 40,000 yesterday. So if you say 47, 48, still, I know that you have seen Bitcoin at different prices. 45,000. So yesterday price remained, the lowest was 45, highest was 48. So it remained between those 46,000. It was not 40,000 yesterday. So today, if you see, the lowest it has gone is 45,170. Highest it has gone is 47,260. And right now it is again 46,000. Okay. So yesterday when I asked about that, how much do you think a Bitcoin price moves in a day? Several answers came: $1,000, $2,000, $5,000, $10,000, and I told you all of you are right, because today, if you see, lowest is 45,170, highest is 47,260, and right now it is 46,000. So it has already moved around $2,000 while we speak. So this is the volatility and this is the fluctuations in Bitcoin. That's why I told you that every time you should see your watch list. Okay. If you remember yesterday, I told you you should see your watch list. If you wake up in the morning around 6 to 7, that's when the Asia is at its prime. Keep looking at markets, how they are moving. Look at Chinese index, look at gold, silver, oil prices. Commodities move a lot when Asia starts. Then 11 a.m. when UK and Europe opens, right? Around 12:31, major fundamental news comes out for UK and Europe. So you can see during that time. 4:30 p.m., a lot of US news comes out related to jobs report and data. We talked about non-farm payroll and other employment data, which also comes out. 5:30 p.m. US stock market opens, so you can see your watch list around those just to see how the price movement happens. And then before you get off to sleep, just look at what was the entire day movement. Again, 5 to 10 minutes every day, every interval, around 20-25 minutes you spend for the whole day divided. And you do this for 7 days and you will have something called as a price anchor in your mind, like I have put for gold yesterday. Right now, today, while we are talking, let me tell you this. Gold price right now is 1782. Yesterday I told you 1785. Right now it is 1782. 1782. 1782. Okay. Now this will continue. I want to form this price anchor. So by the end of 4 or 5 days, if there is an unusual movement, you will get to know first. And I'm not saying the prices of all of it, but I would really encourage you to form this watch list. So you can put gold as a price anchor, crude oil, silver, German 30, S&P 500, Euro, Amazon, so Bitcoin, for example. So you will know that how the prices are moving. There's a question, when does US future market opens? US stock market opens 5:30 p.m. Dubai time till 12 or 12:30 a.m. So UAE timings, when we are looking at 5:30 p.m. Okay. Perfect. So now once we go through the watch list, we can see why watch list is prepared. Now we are going to talk about how we place the trades, and trades are placed through something called as margin trading. Okay. Now I'm going to do a transaction over here and we are going to do these transactions together. So if you have your demo account, you can open. Right now, my demo account equity, first thing which I have to see is how much money I have in my trading account. Okay. Now in my trading account, I can see something called as account value, which is $100,000. Of course, this is a dummy account. So you are looking at $100,000. You look in your account, how much it is. Okay. It could be 10,000. It could be 20,000. It could be 30,000. It could be 100,000. Whatever amount it is, you can always add more amount by clicking on this particular option. There's a dollar sign. The third option right here. If you click third option right here. So this is products library, which shows you the products. This is the watch list, which helps you prepare the watch list. Third option, last menu, funding. Click on funding and you will be able to add money in your demo account. So right now you can, if you have 10,000, you can add 90,000 more. You can add $10,000 more. It's up to you. Right now I'm doing with a demo account of $100,000, so I can show you more trades. It's up to you how you want to do it, right? So once you see your demo account, it's open. To do any trade, I need a order ticket. Okay. Please, those who do not have their demo accounts, please write it down on your notepads what I'm doing, and I will later on, once everybody is done, you can have a one-on-one session and I can sit with you and make you do how to use it. Now I need an order ticket. There are two ways to get order ticket, but I'm going to tell you the most easiest one. Wherever you see price flickering, a live price flickering, click on it and the order ticket opens. So let's say, okay, there's a question. I will answer this question as well. Just give me a moment. Now, let's say you are looking at the gold prices right now. Okay. This price buying and selling, buying and selling. So if you look at right now, I can see blue is in buy, sell, buy, sell. If I click on it, I will get something called as the order ticket. Okay. So whenever you see, if you click on your watch list and you see the prices, buying and selling prices, you click on the buying price, order ticket opens. Even if you click on the selling price, order ticket opens. So if you want to buy, you click on buy and the order ticket will open. Similarly, let's say by mistake you have opened a chart, or not by mistake, maybe you're doing some analysis and your chart is open and you want to open order ticket from your chart. How will you do? Again, click here and you will be able to open the order ticket. So basically, wherever you see the live prices flickering, click on it and you will be able to find your order ticket. Order ticket is important to execute the trade. Without that, you won't be able to. There is a question: in an actual account, how do we transfer the money to this trading account? So if you have a live trading account, all you have to do is transfer money to CMC Markets Australia. There in your live account, the details are already given. There are two ways to do it. You can add your credit card and can do the transfer, or you can do a wire out transfer from your bank, add the beneficiary as CMC Markets Australia, the entire details, and you can wire out funds from your bank account. It will reflect in 2 to 3 working days, and the withdrawal takes the same amount of time. So there are two ways to do it. You can add your credit card, or you can wire out funds from your online bank account. Right now, moving back, I'm sure everybody is able to open the order ticket. How do you open the order ticket? Look at the live prices, click on buy. I want to buy gold right now using the online platform, and how I'm going to do it. Now, please keep the order ticket open. Question: is there a minimum fund to be transferred? Again, that is something which we can discuss later. Depends on your risk, depends. So that's what I'm trying to do right now. I'm trying to explain you the leverage so you understand the risk, and then you decide the amount for yourself, that how much risk you're willing to take, right? Now let's try to understand this. How much money I have in my demo account right now? $100,000. How much money do you guys have in your trading account? Just write whatever account value you can see. Account value is the top right corner on your trading account. You can see top right account value. What it is mentioned, $100,000 in mine. It must be $100,000 in your account, or 10,000, or whatever amount you can see right now. Type your account value, guys, on using your chat option. So I know, okay, it's 107,000. Okay, 100,000, 100,000, 100,000, 100,000. Okay, 200,000. Okay, perfect. So 10,000. Those who have 10,000, if you want to add more money, you can. It's a dummy account. Or if you are looking at 10,000, you can trade with it. 120,000. Okay. So gosh, if you guys are trading already. Perfect. Perfect. Okay. Why I'm making you type this? So you know that how much money do you have right now. Okay. So even if you have put $10,000, you have 10,000 in your account. You have 100,000, you have put 100,000. For those investors who have 10,000 right now in your demo account, you know you can add more money by clicking on the payment option, click on funding, and you will be able to add more whenever you like to. So if you want to go ahead and do more trades, you can write here 90,000 and add more, right? Now moving on, we open the order ticket, click on this here. Now, in the normal physical market, if you had to buy gold, let's say we are talking about physical gold, something which we can see, because this is online platform, right? So you cannot have a physical delivery using this online platform. Whatever you buy or sell here, it remains in your trading account. You do not get any physical delivery of anything which you buy or sell over here, right? It's just in your trading account, in your positions. It's virtual. You do not get the physical delivery of any commodity or currency or index which you buy. Now, if you wanted to buy physical gold, what will be your first step? Let's say you wanted to buy gold worth $100,000, or if you wanted to buy gold worth $10,000, you go to, say, Gold Souk or any jewelry store. You look at the value of gold. You have $100,000. What do? You pay $100,000 and you get the physical gold, right? Then you come home and open your safe and put that $100,000 worth gold, lock your safe, keep your key somewhere very safe, and you're not able to sleep for the rest of your life because you have $100,000 worth gold in your house kept in a safe, right? This is exactly how a normal transaction would occur. You pay $100,000, you get gold worth 100,000, you store it. Tomorrow, if the price of gold goes higher, you go and sell this physical gold. You will get, instead of 100,000, let's say if the value has gone up by $10,000, so you get $110,000 back. So you made 10K profit and you sold the gold. This is how a normal physical gold transaction would happen. How margin trading works. Now, let me tell you first what margin trading is. So margin trading, it is like a method of trading assets using the funds which are provided to you by the broker, in this case CMC Markets, which is your platform provider, right? Now, a regular trading account, as I said, how would you buy regularly? You pay cash, you get it. But a margin account will allow you as an investor to access higher sums of capital. So basically how it will work, when a margin trade is initiated, you as an investor, what you do is you are just required to commit a percentage of the total order value. Now, let's take an example. I want you to buy gold. Okay. Open your order tickets. Now, if you have already opened your order tickets, those who have $10,000, write in the amount 10,000. Those who have $100,000, write in the amount 100. Don't do anything else. Just write $100,000. So first, I want you to understand. Yesterday, I told you gold is dollar per ounce. 1 ounce of gold is $1,783 right now. So left side of the order ticket says units. Right side of the order ticket says amount, which means if you write 1 unit, which is 1 ounce, and press enter, you will be able to see the correct buying price of the gold, which fluctuates with the current market. If you write 10 units, which means 10 ounce, it is equal to $17,000. If you write 100 ounces, it shows you $178,000. Now, in my account, I have $100,000. So what I do, if I write 100,000 in the amount, it calculates number of ounces for me automatically, right? Now tell me, in your respective account, those who have $10,000 and those who have 100,000, tell me how many ounces of gold, when you type in your order ticket, the exact value which you have in your trading account, if you type that, how many ounces of gold you will be able to buy. Don't click on the buy position right now. Just tell me how many ounces it shows you when you write your entire amount which you have in your trading account. Go for it, guys. Tell me how many ounces. So those who have $120,000 and want to buy gold worth 120,000, tell me how many ounces you can see. Yeah, please go for approx units, no problem. 56.06. So that is $100,000 worth of gold. 56 units, 5.6 ounces, which means $10,000 worth of gold. 56 ounces. I saw somebody had $120,000 and $107,000 also. 100,000, 56 ounces. Perfect. So you know what I'm talking about, right? To buy $100,000 worth of gold, you have to buy 56 ounces of gold, To buy $10,000 worth of gold, you have to buy 5.6 ounces of gold. You want, for your clarity, as I told you, that 1 ounce is 31 grams, 1 troy ounce is 31.1 grams. So you multiply it by the number of ounces, the grams, and you will get the amount in kgs also. But I would suggest you keep it very simple. So for those who wanted to buy $120,000 worth gold, 67 ounces or 67 units, right? Perfect. Don't click on buy right now. Just write your positions. Now, if you can see, while you put your amount, your ounces are calculated automatically, which means whatever money you have in your trading account, you want to buy gold with it. Now, there is something called estimated margin. So if you see in the order ticket where the amount is mentioned, there is something called stop loss. Don't click on it. Take profit. Don't click on it. But you can see something called estimated margin. Okay. Estimated margin for $100,000, it shows 5,000. If you're buying $10,000 worth, it will show you 500. If you're buying $120,000 worth, it will show you somewhere around 6,000. Basically, gold has something called a margin rate of 5%. 5%. What do you mean when I say 5%? I mean that if you want to buy gold worth any amount on this platform, a margin trading process is followed by which you can buy gold worth 100,000, but you do not have to block complete $100,000 to do that transaction. Like when you went to a jewelry store to buy $100,000 worth gold, what you did, you gave $100,000 and you got the gold. When you're doing this online, it is kind of similar. You are getting gold worth 100,000, but you do not have to pay complete 100,000 from your trading account. All you have to do is deposit 5% of the trading value. You just have to commit to the trade that I am blocking 5% of the total value. Okay. And I want to speculate on the buying and the selling prices. So when you are buying gold, you're expecting that the prices will go higher, right? That is why you are buying it. That is the reason why you are buying it. So basically, when you are doing a margin trade, all you have to do is commit a percentage of the total order value, and you will be able to buy the complete order. Take as an example, if you drive a car and when you purchase the car here in Dubai, let's say the car cost was 200,000 dirhams. Now, if you had 200,000 dirhams in your account also, would you still pay 200,000 dirhams and buy the car? Mostly no. Some of you might, but most of you will pay a down payment and then get an auto loan and then keep paying installment and interest over it, right? Similarly, over here, when you are buying gold, you're not giving $100,000. You're just paying a margin money, which is 5%, which is $5,000, and rest is the leverage. Because you get gold worth 100,000, your profit and loss will be on 100,000. There's a question. Does this apply to stocks as well or only commodities? Every product which you buy or sell on this platform, that trading is done on margin trading. Whether it is stocks, whether it is commodities, whether it is Bitcoin, whether it is currencies, whether it is indices, everything and anything you are buying or selling here, it is done on margins, which means you do not have to block the full amount. You are committed to block a specific percentage. In gold, it is 5%. Now, everybody with me, you have your order ticket, you have put your amount. Now, when I tell you to click on buy, place buy order, it's a 2-click process. You click once and then you confirm it. But when you do it, all you have to see is what happens on this top banner right here. What happens to your account value? What happens to total margin? And what happens to the available balance when you do the transaction? So with me, 5, 4, 3, 2, 1, click on buy market order. Click once again. And now I have placed my order, and I'm sure all of you have placed as well. It shows you bought gold, 56.1 ounce, buying price is 1782.3, And from here, look at, see, next to the new order, you can close this window right here. And now look at your account value, guys. Your account value is fluctuating up and down, right? On the left side, look at total margin screen, which means to out of $100,000, 5,000 is taken, held as a margin money for the trade which you have placed right now, and you still have $95,000 available as cash, because I told you that your entire cash is not blocked when you are trading. Okay, there are two questions here. Does the margin percentage vary product to product? Very good question. It does. Most of the stocks have a margin around 5%, 10%, 20%, depends on every stock. Bitcoin has a margin of 50% blockage, while gold has a margin of 5%. Stocks like Alibaba has a margin of 15%, and depending on every commodity and currency, the margin varies. Can we trade without the margin? So in this platform, every trade you take, there will be a margin block. If you want to have an all cash account, we can connect you with a different broker, and you can trade without margin with a different broker. It will be a complete cash account. But let me explain you further that how margin works, so the half knowledge is completed. I mean, I don't want to give you half knowledge, introduce you to the margin, and not tell you what are the risks about. Once you know both the things, then you are more than free to take your decision whether you want to trade with margin, without margin, with margin, less risk, or without margin, very conservative, right? Now, so far, I hope everybody has done the trade. If all of you have done the trade, give me a yes or a okay. Anyone who has not done it, type a no. If you were not able to do it, or if you want me to tell you how to do it. Question. So for stocks, it's not a commodity that you take delivery. So why is the margin? So for stocks, it's not a commodity that you take delivery. So why is the margin? No, so margin is just a commitment for doing the trade, because all what you see in this platform, these are CFDs, these are derivatives. A CFD, when we talk about a CFD, with CFD trading, you do not buy or sell the actual asset. Okay, there is no physical share or currency pair or a commodity, but instead you buy or sell a number of units, number of quantity for a particular instrument, depending on what you think whether the price will go up or down. So there are a lot of CFDs. Like for example, for every point the price of the instrument moves in your favor, you will gain, and if it goes against you, you will lose. So CFDs are leveraged product. That's why we allow you to take margin, right? And CFD trading, it is basically a financial derivative. It is not the actual product. It is the replica of the actual product. It just mimics the price of it, right? Second. Okay, so yeah, okay. I think one gentleman has not done the trade, but most of you have done. Actual amount of buy, when we will deduct from the amount. Okay. So for stocks, okay, it's clear. Can we trade without margin? Okay, this is done. This trade is valid for 1 day. No, this trade is not valid for 1 day. So when you take a trade, like for now, if you have purchased gold, you do nothing and just hold on to it. And tomorrow when you log in, it is still going to be there. So it's not something which you are forced to close on 1 day or 2 days or 3 days. You can buy and you can hold on to it as long as you have the money. Okay, for those who have written no, if you are not able to do the trade because if you don't have the demo account, then you can write it down and I will help you out later on in understanding the platform. If you have the demo account and you are not able to trade, then let me know. I'll help you either. Actual amount of buy, when will deduct it? When will be? If you can rephrase the question, I'll be able to answer you better. Okay. Now we have taken the trade. How do you know that you have taken the trade? You saw the confirmation, but where to find out whether you have a profit or loss? Where do you go? This is your product library. So this is just to see your products. This is your watch list. So you can create a favorite list. Third option is your account option, where first thing which you see here is positions. I'll give you 5 seconds to see this. positions. Next to the watch list, the account option which has positions. And when you click on positions, it shows you the trade which you have placed. Now, start from the first column. You have purchased gold. B stands for buy. How many ounces you have purchased? 56 ounces worth $100,000. In which total profit and loss you have right now? What I see, I have a loss of $48, $49. It's a notional loss because it keeps moving. Okay. If you expand your columns, you'll be able to get further information like what price you have purchased, what is the margin blocked, how much margin is blocked, everything. If you see it here, I'm doing this for myself so I can see how much margin money has been blocked. If you look at this right here, see, I just expanded my columns manually and I can see that $5,000 is blocked to take a trade worth $100,000. Now, question. I have a demo account with I have a demo account with a different broker. One, I don't have a demo account. So those who have joined today, if you don't have a demo account, you will definitely have it by tomorrow morning. So for now, just click the picture what I'm doing and I'll help you out. If you have a demo account with a different broker, all CFD brokers work in the same way. So if you have a demo account with a different broker, just try to take a trade in that. At least learn that. It's a learning session, so I don't mind if you have a different broker. The amount deducted is 5% margin, is blocked and not full amount for buying. Balance 95%, where will be deducted? So a very good question. The question is that if only 5%, so first question comes in, your profit and loss, will it be on $5,000 or will it be on $100,000? And for those people who have taken the trade with $10,000, the question is your loss or profit on $500 or on $10,000? Because the trade which you have done is of the full value. So please do make no mistake. Margin money doesn't mean that your loss is restricted to that particular amount, because the trade which you have placed, and I'm taking $100,000 example. So I'm telling you the trade which you have taken is worth $100,000. So your profit and loss is based on $100,000, right? Now, coming the next question, which was asked, that if the amount which is used is 5%, then where does the rest of the 95% comes from? Now, that is the leverage which is provided to you by the broker, which means from your total amount, cash blocked is 5,000, but rest $95,000 is what you're getting is leverage from the broker. Leverage means the leverage itself means using borrowed funds in your investment to enhance the efficiency of the capital. Anybody today who is doing business, why do you take a loan from the bank? When you know that you have to pay interest, why do you take loan from the bank? Because you know that when you're taking loan from the bank and you're using borrowed funds, whatever the profit comes out, right, your own capital or your own equity is this much. And when borrowed funds is this much, so whatever is the profit, you know that this is a different fund you used. This is not your own fund. So while your extra money can be put somewhere and it might be earning interest, you use borrowed funds for your business. So whatever profit you gain on those borrowed funds, right? Question, do we pay interest on leverage? So interest, or you can call it as a holding cost, in commodities, cryptos, currencies, or indices or stocks, whenever you buy and hold on it for a day, you do pay a holding cost, okay? And that is already determined, and that holding cost is based on the world interest rates, which means when we are looking at the current rate of US Central Bank and whatever is the LIBOR, London Interbank Overnight Rate, LIBOR plus broker markup normally makes holding cost. So yes, you pay a certain charge because you are taking leverage, and that is called holding cost, and it is described to you in when you are getting when you're doing the trade, you will already be able to see how much you are going to be charged, and that is something which is very transparent. Now, let's understand first thing. When we see the profit and loss, look at my screen and look at your screens. I'm sure everybody can see the number of units. I have 56 ounces. and my buying price is 1782. Write it down on the notepad if you have. If you don't have a notepad, get a piece of paper or use your phone. 56 ounces I purchased at 1782. If gold goes up to 1797, do I have a profit or I have a loss? If I have a profit, how much is my profit? If I have a loss, how much is my loss? If gold price goes to 1797 and I have 56 ounces, what is my total profit or loss? Okay, if I have a profit, then how much profit? Most of you have said profit. How much is my profit if the price of gold goes to 1797? Okay. So for those people who have 5.6 ounces, profit is $84. Absolutely correct. I have 56 ounces. Movement, $840 profit. 16. Okay, 16 means talking about $16 movement, right? So $16 per ounce, 16 multiplied by 56.1, total profit is $840. Perfect. $15 1 ounce. Perfect. Okay, so I hope the math is clear when you're calculating your profits and losses, right? So if right now I have purchased at 1782, gold goes to 1797, that means almost $15, $16 up. $15, $16 multiplied by 56, whatever is the actual amount, actual profit, that is going to be, right? So now you know how to calculate your profits and losses. Now there were questions, what is the approximate percentage of holding cost? Now, how do you determine that? Let me show it to you right now. How do you see your leverage cost or your holding cost? Look here, what I'm doing. Leave everything and see what I'm doing right now on my platform. I'm clicking here. Then I go on product overview. And it shows me last holding rate by minus 1.12% charged. Minus 1.12% means if I have $100,000 worth of gold, okay, calculate 1% of this 1.2% or 1.12%, what you saw, and whatever is the total value divided by 365 is what you are charged daily. Okay, so you can do that calculation for yourself and you will get your holding cost very easily. Now there was another question, can we sell before buying and how much time will get to buy? Now that's my next option. This is my next position right here. Let me just match this up with my presentation. Okay, very quickly guys, can you see my screen right now which says what is margin trading? Yes, Mr. Supin, I'm going to repeat the holding cost procedure, no problem, just hang in with me. Can you see my screen right now? Can you see my presentation? What is margin trading? I hope everybody can see it. I keep switching screens. I want to make sure that everybody can see everything. Great. So, okay, most of you can see this. Perfect. Now, margin trading is the method. So what I showed you is what I'm going to explain it to you in the pictorial way. What you deposit, $100,000, your buying power can be higher. Okay. So what margin trading does to you is that whatever you buy, you only block a percentage. So by using leverage, it increases your buying power. So in a $100,000 account, if you buy $1 million worth gold, you don't have to have $1 million in your account. You just have to block 5% of $1 million, right? So this is exactly how margin trading works using leverage. Second thing is called short selling, which somebody asked me a question, can I sell before? Now, short selling is another important feature why people do online trading, because now all the question you have, yesterday somebody asked me this question, why do I do CFD? Why not the actual direct ownership of the stock? Which is better, CMC or interactive? So basically, CFD allows you to do margin trading. It allows you to do short selling. And how short selling works, there's a question, leverage is per day charge or total till I sell? If you're holding your trade every day until you sell it, you will be charged every day. Okay. So the percentage cost which you see on your platform is for 1 year. You calculate that cost and divide it by 365 is what you are charged every day till the time you're holding that trade. So that is charged to you every day. It's just like a bank, right? When you take a loan, they charge you for as long as you have the loan. Once you repay it, they don't charge you for that. So if you close your trade by before the end of the day, so you're not charged the holding cost. But if you hold on for 1 day and there's a mark to market, you're charged. So you can see that in your history. Second thing, short selling, which is the another important concept. Please do not leave this session without understanding short selling and risk management. Okay. I don't want to give you half knowledge. I want to finish this with risk management and short selling so you know how it works. Now we are going to talk about short selling. How short selling works. I bought gold. Why I bought gold? Let's say I expected that prices of gold will go higher, so I purchased it, right? All I am expecting is when gold goes up and I see my profit, I will close my trade and book my profit. Okay. Now, when that happens, I know that my expectation was that the price trend is higher, so I'm buying it, I'm selling it. What happens when I'm expecting that the prices will come down? How do I make money from falling prices? How is it possible that I can make money from the falling prices? This is where the short selling comes in. And how short selling works, you have to have a broker, you have to have access to the market, buyers and sellers, and you can make money, you can possibly make money from the falling prices if the trade works out. How it works? First and foremost, what you do is you pick out the instrument, the commodity or the stock, which you think the prices of which are going to fall down. So all of you send me, let me mark this question. What if the losses will reach 50% of the capital with margin trading? Absolutely. So this is the risk management part, which I will explain you. Just hang on with the question. Let me explain the short selling to you. Name one stock which you don't like. Has to be a US based company because we have access to US based stocks demo account. One company which you don't like. Add that in your watch list, the company which you don't like or which you think prices are going to fall down. Write the name of it. And not necessarily that you don't like it. Maybe you are thinking the prices will fall down. Go for it. And you'll be surprised that how all of you, majority of you have the same idea. Okay, go for it, guys. Go for it. Go for it. Write it down, and I'll tell you what everybody has written. Okay. So I have started with Tesla, Bitcoin, and then there is US 30 index, which is Dow Jones, Fisker, Tesla, BlackBerry, Apple. Okay, please briefly repeat margin trading and short selling. I'll definitely tell you short selling and I'll do a transaction. I'll tell you. Tesla again, eBay, okay, Kexin Auto Holdings, perfect. Now what I'm going to do is, these are the companies which you don't like, right? So you can search in your product library and follow the procedure which I am doing. So what you need is, first of all, look at my slide before you do anything. Look at my slide and let me tell you how it works. Now, in short selling, when you are expecting price of something is going to come down, what do? You call your broker and you ask him, or you borrow the shares of the company you are expecting that it will fall down. Like, for example, this is Tesla shares. Okay, this is Tesla shares, and the price of the Tesla shares is $670 per share, for example. Okay, $670 per share, and this is a Tesla share certificate which my broker had already with him. So what I did, I borrowed from broker's inventory Tesla shares. How many Tesla shares? Just one Tesla share I borrowed from my broker at $670, the current price, but I am not paying it to him because I'm borrowing this share. Now what I did when I borrow it, and look at my slide, this is step one. Okay, you can see step one, borrow 1 share of Tesla from the broker. That time the price was $670. Now when I borrowed this, what I'm doing, I am selling this to the market because market has buyers and sellers both. So what I did, I borrowed from my broker and I sold it in the market. Now when I sold it in the market, when I sell it in the market, 1 share, the current price of Tesla is 670. So I will receive $670 because I sell it for a price. Now when I sell it, all of you in your notepads write down plus 670, right? Because you borrowed it from your broker and you sell it in the market. So you receive money, $670, 1 share. Okay. Did you write it? Say yes if you write it. Say okay if you write it. I want you to do this example with me. So I want to make sure that you're writing it. You borrowed it from your broker and you sell it in the market. So when you sell it in the market, the price is $670. So you receive $670 in your register, right? Plus 670. Okay, perfect. Everybody with me? Great. So this was step 2, that you sold it, right? Now step 3, take a deep breath and wait till the price comes down. Now, obviously, we cannot wait forever. So in my version, the prices have started coming down. Taking a deep breath, prices have come down from 670 all the way down to $600. Elon Musk said something, earnings came bad, anything. Now the price is $600. Okay. Now what do? You run back to the market and buy Tesla share for how much? Because the current price is how much? It's not 670 anymore. So it's $600. How much you had with you? 670. But when you go back to the market and buy that Tesla share, 670, you just pay 600 because that's the market price. And you are left with how much money now? Tell me what's your profit. Go for it, guys. Tell me how much is your profit right now in this whole transaction. You had $670 you received when you sold Tesla in the market. And when Tesla prices went down to 600, you went back and bought it back for 600. So from 670, you paid 600 and you are left with $70. $70, keep it in your pocket. The Tesla share which you received, you give it back to who? From the broker which you borrowed from, right? So this is where the transaction is complete. Somebody said 70 at the borrowing cost. So of course, commission charges reduce it. But right now, let's understand the math behind it. You borrowed it from your broker. You sold it in the market. Then you waited for the price to come down. You bought it back at a lower price. So you keep the difference and give it back to the broker. What is it called? It is called short selling. This is a process how you make money from the falling markets. Now, when you do the short selling transaction, it is exactly how you do a buying transaction with margin. It's not going to be any different. Now, let me take you to the live screen. Is it possible that the broker is not having share which I want to short sell? In CFD providers, most of the time the liquidity is there, okay, at least for the ones which are available. But sometimes, I'll give you an example. During the pandemic, Boeing shares were not allowed to short sell because people started short selling because pandemic airline stock already plummeting. So the brokers from the exchange, they put a ban on short selling to save the company's stock price. That can happen. So if something like that happens, CMC already shows you that the particular product is not allowed to short sell, but that is under extreme conditions. Most of the time, short selling is allowed, right? Let me take you to the live platform and show you how short selling is done so you understand both the transactions. Now I'm in my platform. I hope everybody can see this. I keep asking and rechecking again because yesterday there was some confusion with my screen, so I don't want you to get left. But will broker be not in loss due to this short selling? That's why you need to pick the broker which has the vintage and which is not a B booking model. Because so if we have a one-on-one session, I'll tell you how the brokers hedges their risk. There is a way that the bigger brokers, they hedge their risk with the liquidity providers, right? So that is something which we can always discuss in a session probably for the last day. Let's right now understand the process so we all are clear. Who's making money right now in gold? If you see your positions in green, that means you're making a profit. And look at your account value right now. Is it updated with real-time numbers? Because mine shows 100,022. Yours should show 10,002 or 10,003 or 100,022. Anybody who can see? Can you see if you're in profit? Yes? Okay, great. Is this an intraday process? Do I need to sell and buy on the same day? It's not compulsory. It is not compulsory. It is not mandatory that you have to close your positions by the end of the day. No, it's not. You short sell, you can hold on to the trades as long as you want to. This is not something which you have to hold on to it, right? This is not something which you have to sell it or buy it by the end of the day. Now, let me give you a short selling transaction. I'm going to take Tesla. I can search it from here. I can go to my watch list, whichever is easier. This is Tesla. I click, a chart opens. When a chart opens, all I have to do what I have to do to open the order ticket, I have to click on the live prices. Last time I wanted to buy, so I clicked on the buying price, right? But now I have to short sell. What I do, I select sell. So it becomes orange. Please remember this. I have to sell. How much I have to sell? Now, let's say if I want to short sell 100 shares, I write 100 shares, it will be equal to $65,000. Margin will be 13,000. So I told you that margin for gold is different. Margin for Tesla, how much it is? 20%. Everybody can see 20%. So if I want to short sell 100 shares, which will be equal to $65,000, 20% of 65,000 is around $13,000, 65,650. So if I short sell it right now, I am borrowing it from my broker and selling it in the live market. All of you can replicate this transaction if you want to. So right now, what I'm doing, I'm going to short sell it, place sell order, click again. You sold Tesla Motors. If you click on your positions right now, you will be able to see that I have short sell Tesla at 656. Margin blockage is 20%. Current price is 656.63, right? If you have done this trade with me, give me a yes. If you have not done it, give me a no, but at least note it down how you do it, right? I hope short selling is clear at the moment. I hope margin trading is clear at the moment. See how you're making money right now in short selling. Look at my position. I short sell it at 656.72. Look at the buying price, 656.38. So my buying price is less than my selling price. That's why I'm in profit. Okay. Question, how this share is borrowed. Now, what I showed you in my presentation, that you call your broker and you borrow it. But because you are doing online, you don't have to call your broker and borrow it. You just have to select your order ticket, click sell, write your quantity and place sell order. It is borrowed automatically. Okay. Is limit order also there? Yes, limit orders are also there. But first, I have to cover the risk part very easily, so I can tell you that how you can cover your risk and how you can put a stop loss also. So I hope everybody is clear about what's going on. Trading, short selling, margin trading. When you block only a percentage of the total order value to do a transaction. Okay, what does margin trading do? It increases your buying power. It magnifies your profit, but it also magnifies your losses. So that's what we have to talk about. Now, all my transactions which I have done, it is worth $100,000. Okay, Tesla is worth $60,000. So I have 100 plus 60. There's a question, Yukesh, I was driving back from Fujairah and hence could not focus on margin trading. No worries, sir. Let's have a one-on-one session. I'll stress more on margin trading later. Let me just finish this particular day. If you are free tomorrow, first half, I'll definitely sit with you and cover margin trading for you. Don't worry. And we'll keep doing more and more transactions. So it will be very clear. Nothing to worry about. Now, let's understand what happens when you over leverage it. Okay, I'll take 10 more 15 minutes to finish this session. So please be with me because now the risk part comes in and it is very important. When you over leverage your portfolio, how do you over leverage your portfolio? Let's say I'm looking at gold prices, or let's say I'm looking at Euro USD now. Euro USD, my currency. And let's say I'm thinking to buy Euro. I'm expecting euro will get stronger. Just say, again, no research. I'm just doing a random trade. I want to buy, okay, too much. Okay. I want to buy 2 million euros. Now I want to buy 2 million euros. Look at the margin which is used in euro. How much? 3.3%. 3.3%, which means if I have to buy 2 million worth euro, look at the quantity here. 3.3% of 2 million, it will be around $78,000, right? $2.34 million, $78,000 is your margin. I am buying 2 million euros. How much money I have in my account? $100,100, right? So I am buying 2 million worth euros. Margin blocked will be 78,000. How much money I am left with? $81,000 in my account. Look at this. Because I have taken 2 trades, so margin is blocked for those 2 trades, and I have available 81,000. I click on buy. I just bought 2 million worth euros, right? For those people who are trying to make sense out of it, that how the hell he can buy something worth 2 million euros in an account which has $100,000. That's why, because I'm taking leverage. I don't have to pay 2 million euros. I don't have to pay $2 million. I just have to give 78,000, block it as a margin, and I get my position of 2 million euros, right? Because rest of it is leverage. Now, I have a $2.5 million position because I have $100,000 worth Tesla, $65,000 worth, $65,000 worth Tesla, $100,000 worth gold, 2.3 million worth Euro USD, which means my portfolio is highly over leveraged. Most of my money is blocked as a margin. Look, tell me, let me increase the size of the screen to make sure you understand this. What is my total margin in these positions? How much margin from my equity has already been used? Look at these numbers. Tell me how much margin I have already used. Go for it, guys. Use your chat options. Tell me how much margin I have utilized already. I put $100,000, out of which how much money is already blocked now? Okay, perfect. Okay, perfect. So now you know that I put $100,000, out of which 96,000 is already blocked. 96,400 is already blocked as margin because I have bought 2 million worth stuff and around 96 is blocked. How much money I am left with? 2,600. Now comes the most important question. That if all the positions, now tell me one thing. So let me show you the size of my position. Okay, now can somebody tell me, I just opened a column. Can somebody tell me what is the exact total value of my portfolio? Exact total value or the total size of my portfolio? How much worth assets I am holding right now? Look, the answer is in this particular screen. How much total money I am holding right now? What is the total value of my portfolio? Okay, I got one answer, which is right. Okay, another one. Perfect. Everybody is on point, bang on. 2.5 million, which you can see where? You can see directly at the end of this window. You can see it properly that I'm having $2.5 million worth. So now when you know, tell me if the value of all these trades, if the value of this portfolio goes down by 10%, how much is my loss? Do this math. If the value of this portfolio goes down by 10%, how much is my loss? If the value of my portfolio goes down by 10%, how much is my loss? Okay, got a very quick answer. One, brilliant. Others, go for it. If the value of this portfolio falls down by 10%, what is my loss? Give me the exact number. Give me the exact number. I know it's very easy math for you, but I really want you to, yes, go for it. Perfect. 250,000, right? How much money I invested? $100,000. But if 10% portfolio goes down, I lose 250, which means 100 I invested, which is zero, but another 150 I owe to the broker. So that makes one thing very clear. What does it make it very clear? That leverage is a double-edged sword. If my portfolio goes up by 10%, I will end up making $250,000 profit. But if it goes down by 10%, I will end up losing $250,000, out of which 100,000 only I invested, 150,000 I owe, right? Now, when we are talking about this, let's understand this. Yes, somebody just says CFDs are very risky. Absolutely. So that's why I'm here to highlight the risk part. Every product is risky, okay? But when you are not careful and when you overdo it, when you abuse something, when you abuse a privilege, what happens? Now, do you have to pay extra from your pocket? The kind of math we did, yes, you have to. How brokers saves themselves? Because everybody is taking leverage. So if you do not pay and you declare bankruptcy, how brokers are going to work with? So what brokers do, they put a stop to it. How they put a stop to it? Now look at your platforms right now. Look at this small information circle which says I. Okay. When you click on I, there is certain statistics. And if you scroll down at the end, very end of it, it tells you that account closeout will occur when your account revaluation amount drops below the following. Standard closeout level, $48,200. And if you see, this is not a coincidence, 48,200 is the exact 50% of the margin which you have blocked, $96,000. What does it mean? It means when the market starts dropping and this account value of yours from 98,000 will come down to 48,200, all your trades will be closed completely and you will be left with $48,200. Okay. So when we are looking at the overall understanding of what happens when price starts dropping, most of the brokers, they will not allow you to go more than what you have deposited. Sometimes there are market gaps under rare extreme circumstances, and that's where the account goes negative. But those are rare events, and that's why we never encourage anyone to take full leverage or during volatile sessions, during market hours, because if market opens at a gap, you might end up losing more than what you have deposited. But under normal conditions, the broker liquidates the account of the client when the account value drops 50% of the total margin. I hope this is clear to everyone because this is the most important part. Please do not leave. Understand this. If your margin is $96,000, 50% of 96,400 is 48,200. So when your account value from 99,400 comes down to 48,200 is the exact point where all your trades will be closed and your $2.5 million position is liquidated. All you are left with $48,000. So remaining money is your loss, but you are left with certain amount. So you do not end up losing $2.5 million because the brokers, they liquidate the position the moment your account value reaches 50% of your total margin. And you can see this number by clicking on this screen right here, information. Okay. Again, you click here, you'll be able to see it right here. Okay. So this is the liquidation part. Now, somebody pointed it out. Can I repeat this? I will repeat this. Let me finish this session. I'll definitely repeat this out. So I'm sure everybody is on a time constant over here. So I don't want to take too much of your time. But somebody pointed out here the stop loss. Now, this is the risk, right? So first and foremost, how to manage the risk. Okay. Another just 5-10 minutes to understand. So now you understand what is the risk, right? You don't over leverage it. Second thing, when you're trading, how you manage your risk, you put a stop loss on your trades. Every day trade you do, please put a stop loss, because stop loss allows you to sleep with a peace of mind and restrict your risk, remove that emotional factor from your mind. How you do it? Very easy. I'm looking at this trade, for example. Select on this modification pen. You see here, the order ticket comes in. It shows you how much is your loss is already right now. Click on stop loss. Okay. Write how much loss you're willing to take. Let's say $1,200. You press the amount. Price is calculated automatically. And modify this. Close. And now you can see that there is a stop loss, which means if your selling price of Euro USD comes to 1.1712, automatically your loss will be booked $1,200 and it will not fall beyond it, right? Which means your loss is now restricted. That is called stop loss feature. First way to manage your risk. What are a few more ways to manage your risk? Right here. Let me show it to you very quickly. Risk management, stop loss. This is the pictorial representation of what I just spoke about. How you put a buy order, and if you put a stop loss, the price comes down, it hits the loss, it booked. Because if the price of that thing goes any further down, and if you don't have a stop loss, you might make a bigger loss. So stop loss is something which is really important. You can talk to your consultant and they will tell you where to put a stop loss and how to put a stop loss, right? So this is one way, and this is an available feature. Second thing, how do you manage your risk? This is a question, how to decide what should be the stop loss value on trade. So this is something which we are going to discuss tomorrow on when we are talking about technical analysis. Tomorrow we are going to talk about how you place a stop loss by looking at charts and patterns as well. Our stocks in India also with margin trading, like US. US does not allow margin trading. So US does not have margin trading because for US, in US, the SEC doesn't allow. They call it illegal, but FCA and other European, they allow them. Are all platforms Interactive, eToro, Trading Basis? eToro does CFD, so yeah, that they are definitely leveraged. Interactive, if you don't want to do CFDs, you can do direct equities with Interactive. I can help you out with that, and it's an all cash account. You don't have to take any margin, so you can do that. Is the stop loss good till cancelled? Yes, it is. It is good till cancelled, till it hits the price. If you want, you can cancel it manually also. What is spread? Spread is the difference between the buying and the selling prices. I'll show you right away. Let me finish the diversification bit. How do you diversify the portfolio? This is something which we discussed on the first day, that you allocate your investments as per the risk and as per the reward. You put some money into bonds, some into stocks, some into speculative, given that it should be a mixture of everything. But this is the most important thing which I want to tell you. Sectoral investing. Take a screenshot of this and write it down, how and which sector you should invest depending on how the economy is going. Okay, look at this. Is selling position always a short sell? If you start your position with selling, then it is called short sell. But if you buy something and then you close your trade to book a profit or loss to sell it, then it's just a selling position, right? Okay, now guys, look at this, what I'm showing it to you. When the economy is accelerating on the higher side, okay, at a faster pace, the sectors which you should invest into: consumer discretionary, which means the brands; financials, like the banks; industrials, because there is a lot of development going on; infrastructure, construction; IT stocks, Apples, the Facebooks, the Netflixes; materials, raw material; and real estate. So when the economy is increasing, growing at a high accelerating pace, these are the sectors which get benefited. You can write it in your notepad. Again, I'm giving you a good diversification strategy. Sectors which you should avoid: energy sector, healthcare, utilities are the ones which may not perform too much as compared to the sectors like consumer discretionary and financials and industrials and IT. When there is acceleration, when the economy is growing at a higher pace, when it reaches to a moderate growth phase, when it's not accelerating, it is still positive, but it is moderate, start investing into communications and start avoiding the brands, start avoiding the material, the infrastructure, the raw materials. When the growth rate falls, again, not when the economy falls, when the growth rate of the economy starts falling, that's where you start investing into. Somebody said I'm totally blank. I'm so sorry. Maybe you have joined the session today, but if you want, I'm ready to sit with you tomorrow in the first half, and I'll bring you with speed for day one and day two. So don't worry about it. Let's sit together, talk to your relationship manager, or email it to me, and I'll sit with you tomorrow first half, and I'll bring you to the speed. So don't worry about it. If you had the same platform I have, it would be easier for you to catch up. So don't worry. Let's do it together. It's not difficult at all. Okay. So when the economy is going down at a slower phase, when the economy is growing at a lower phase, what you should start investing into: energy sector, oil companies, healthcare sector, utilities, consumer staples. What are consumer staples? Defensive sector, FMCG. Okay. And then when you see that there is recessionary conditions during pandemics, for example, again, defensive sector. No matter how much recession it is, you still need a toothpaste, right? So FMCG products, healthcare, utilities, something very basic, it should be in your portfolio, because these kind of companies, they give you a fixed dividend. So you should obviously look into it. So in 2020, when the economy went down, everyone invested in energy, healthcare, etc. See, a lot of people invested in healthcare. I'm sure you're aware about that. A lot of people invested in energy also, because if you see energy stocks like ExxonMobil and Chevron, it went down to $30 and it picked up to 55 and 56. So people did that. The only reason why people were slightly away from oil companies was because oil prices went negative. So it kind of scared them a bit. But then if you see the energy sector, as compared to 2020 to 2021, it has bounced back. And so has the oil prices. Why not IT? Why not IT? Because, just take a wild guess. Because a lot of people, IT stocks, what you need the most in recession, you need a fixed income, right? The IT companies do not give dividends, because whatever money they make, they reinvest it on technology development. So Zoom or Google or Netflix or Amazon, they don't give you dividends. They move a lot. They are very volatile. Okay. But during recession, you need those companies which have, first of all, a defensive sector, which means whose products are going to be sold irrespective. So consumer staples and healthcare is one of those things. And it gives you a fixed dividend. It gives you fixed income. So these kind of companies during recession, they kind of sometimes increase their dividends also to attract more investors. So these are value stocks over growth stocks. Growth stocks during recession may not be a very good idea to invest in. Which are growth stocks? The Teslas, the Facebooks, the Netflixes, etc. Right? Then, so as I said, if you're looking for a defensive strategy, if your outlook is that the economy is going to slow, your goal should be to reduce your volatility and reduce the risk. So you start investing in those sectors which are low volatile. Okay. The growth stocks are very high volatile. They fluctuate a lot. You look at Amazon value, look at Tesla's value, look at Netflix value, Alphabet, Microsoft, Apple, they move a lot. But defensive sector, you pick out those companies which don't move too much, right? So you need that kind of less volatile stocks in your portfolio. So that's why you don't go for IT. If you want to be opportunistic, when you see a growing economy and you want to enhance your returns, you go for IT. You go for financials, because those things will have high volatility, but in a growing economy, you might make good money. Then if your strategy is to hedge against inflation, start investing into energy, material, real estate sectors. If your strategy, again, there is something called market neutral or pair trading, which we are going to discuss during the strategies point, something which we can do tomorrow and day after. All we are going to spend time is to understand charts. We are going to understand stop losses. We're going to do more and more trades today. So assignment for today is, guys, one second, let me share my screen with you before we leave. What is the assignment for today? Whatever you have in your watch list today, you remember these products? Why I made you add these products? First of all, please make a habit. The timings which I gave it to you, please during those times look at your watch list, so you should be aware. Tomorrow when you come, I want all of you to do trades. So if you have 10 instruments and you have $100,000, I want you to allocate $10,000 to all the assets and do buy or short sell, whatever you think. do few buys, do few short sells. If you're expecting prices to go down, if you're expecting prices to go up, put your stop losses, and now you know how to buy, how to short sell. So look at the margin. If you want to go crazy in the demo platform. Do not replicate the trades in the live platform. Do not go crazy in your live accounts, please. What if I open a buy and sell trade at the same time? You can, but there is a way to do it. Right now, I would suggest don't do it. Just go with the flow, what I'm telling you, a buy position, a short sell position. This is something which we can discuss and we can do it right. Okay. So for now, just take a buy trade separate, short sell trade separate. Can you provide details on copy trading and if Century does it? We're not doing copy trades. We have consultants who are allowing you, who are telling you live insights about market. So copy trading is not something which we are looking at right now. And this is something we have algo trading soon coming up, which is much better and much enhanced in terms of that. Copy trading is not something which makes sense at this point of time. I mean, it's if you are independent enough to understand this, then you won't need a copy trader. Many stocks are not available for demo, such as Amazon, Tesla for me. Oh, it should be. Talk to your RM. Maybe you have not got the stocks demo account, or email it to me. Once again, my email right here is yogesh@century.ae. Send me your email and I'll send you a stocks demo account and you can do it once again. Okay. And for those who have started today, do not worry. Book your time with me tomorrow, first half, and let me bring you to the speed with what we have done for the first 2-3 days. And fourth day tomorrow, we are going to learn more about technicals, stop losses, strategies. A humble request to all of you. You guys have been great audience. You have joined me for every day. I'm sure the next 2 days will be really, really amazing. Just a humble request. If you are liking these sessions, please review us on Google under Investor Education Week. Throw your comments if you like these sessions. You want me to continue these sessions for the next quarter, because we don't charge for these sessions. We want more and more awareness. So please, this is all about education, all about information. So I'm ready to give as much time as you want. Before you come to the session, you want to connect with me on first half during Zoom, I can. So please help me out. Review us on Google. My name is Yogesh. If you have any other queries, if you have any other questions, my email ID is right there on the posted, yogesh@century.ae. You can send your questions, comments. You can talk to your relationship managers. If you need demo accounts, if you need anything, we are available to you. And yeah, before I leave, once again, where's the link to review? You can just Century Financial, Google it, and you will find the Google reviews right there. I will add the link for tomorrow. Let me just send it to you right away before you guys leave. Right here. If you go on my website, it's there, but let me make it actually easier for you. Right here. Okay, I think I'll just send you this link. This should work. Send it to everybody. I think this should work. Yeah, I think somebody just sent it. Thank you so much. Perfect. We can communicate with you even after the session is done. Absolutely, you can communicate with me even after the session is done. No problem. After Thursday, I'm working on Fridays as well, so no problem. Okay. And guys, if you have more questions, there is one more. Why don't you just sell instead of a short sell? Same thing, sell and short sell. It's the same thing. It's just a terminology. Not to worry. Okay. Once again, before I leave, on behalf of my team, Century Financial, my family, and myself, thank you so much for those people who are connected to healthcare industry, who are doctors, midwives, first responders. If you have your relatives, friends, spouses who are working in the healthcare industry, a big vote of thanks from my end, from my company. I hope them a very safe and a healthy life. They have been risking out their life for us, and I couldn't be more thankful. So once again, thank you so much. If you are one of them, if you know such people, please convey my regards. This is something which is really amazing. We have to be very united and we have to be together to fight this pandemic. And I hope you a great health. We'll meet tomorrow, same time, and something to learn new. Do your assignments, take random trades, put stop losses, go crazy in your demo account so you can understand the risk, and come up with more questions tomorrow. Book one-on-one sessions with me on the first half, and I'll be happy to help you. My name is Yogesh. Have a good night. Thank you so much for today.